I'd like to welcome you to the Ministry of Managing Money, Congregational Finances, and Stewardship. Today is part 3 in our webinar series, and we're going to be talking about sharing God's gifts, examining congregational expenditures. We're all glad you've joined us today. We've had a number of people who couldn't attend live, but say that they're going to be looking forward to watching the recording. All webinars are recorded and posted on the PCC website under Leadership Webinars, and we'll send you the link so it's easy for you to find or forward to someone else. But it will be up there for everyone to use until we remake them. So we've been promising to start 2 o'clock sharp. It's 2:02, so let's begin. So a little bit of protocol before for today's meeting. Viewers are going to be to stay muted. Our host has already muted everyone. So if you have any comments, please type them in using the chat function. Hopefully you can find the chat setting on your mobile or on your computer, and the chat will be monitored and questions will either be asked as we go along or at the end. There may be an opportunity to unmute to ask questions, but we do have a lot of people registered, so that may be a bit of a juggling act. We'll see. So please do ask your questions in chat, and we'll make every effort to answer them. So today, this webinar is all about spending the gifts we have been blessed to steward. A reminder that this series of webinars is supported by gifts to Presbyterians Sharing. In January, we will explore how you tell the story by reporting and communicating finances to members, sessions, donors, the government, presbytery, and national office. So on January 13th, we'll cover what to present at your AGM, reporting finances throughout the year, and filling out the CRA T3010 and the PCC statistical report. So once again, we're covering a lot, so we may divide it into a couple of sessions. We'll take a poll to see what you prefer, everything in 1 or 2 different presentations. So just a reminder to spread the word. Recordings of this series of webinars will be posted at presbyterian.ca leadership-webinars for people to find and use in the future. We've also been posting the PowerPoint slides and the notes, which you are free to copy and adapt for your context and share with your session, committees, board of managers, or anyone else who might be interested. Now, I'd recommend you only present little bits and perhaps don't go into too much detail as we are doing, because not everyone is as fascinated about this as we tend to be. Okay, so let's begin. So as we look at sharing God's gifts, we're going to dive in depth to some of the details of congregational expenditures that congregations struggle with, including payroll related to matters like deductions and housing allowance, insurance, pensions and benefits, pulpit supply, and property management. We'll also look at synod and presbytery assessments, Presbyterian sharing allocations, and how to remit to the national office. Finally, we'll touch on mission and ministry. Mission and ministry are the biggest parts of our mission and why we are doing this work. So these issues aren't in the order of importance, but it's important to remember that our property and staff are big parts of the way we carry our mission and ministry. So it's good to have a handle on them. One of the benefits of a webinar is that you can pull in multiple people to present, and this really is a collaborative effort today. We have with us Karen Plater, Associate Secretary, Stewardship and Planned Giving, Morris Mawini, Presbytery of West Toronto Treasurer and Finance Committee, who also helped with Treasurer's Handbook. Myself, Development Manager McDonald, Development Manager, Stewardship and Planned Giving. Nicole Jeffrey is here, Director, Pension and Benefits. Leanne Mackey, Pension and Benefits Clerk and Health and Dental Specialist. Carol Nugent may be able to join us later. She's the Payroll Administrator, PCC Finances. Oliver Nguth is here with us today, CFO for the Presbyterian Church in Canada. And Rebecca Weber, is it Weber? I'm not sure which, but Accounts Receivable, PCC Finances. And just a reminder, most of the information we are presenting can be found in the Treasurer's Handbook, which is available for download. So I'm going to hand this off to Karen Plater. Karen? Oh, wait a minute. I'm sorry, one more. We've also taken a number of ideas from Bonnie Ives Marden's book, Church Finances for Mission Leaders. She does an excellent job of integrating both stewardship and money management and biblical principles, and really complements what is found in the Treasurer's Handbook. So we highly recommend it. And now I'll hand it over to the Associate Secretary for Stewardship and Plan Giving, Karen Plater. Thanks.
Thanks, Jim. We're just going to build on the sessions that we've had previously. And a reminder to you back to the first session we did, which feels like a while ago now, that the Treasurer's role is, one of the Treasurer's role is to help disperse money. So we covered receiving gifts, and now we're looking at the dispersing money. So we'll look at things that have to do with the operating budget. So as Jim said, the payroll, utilities, worship, maintenance, program, and mission and outreach expenses, as well as special funds, such as your capital funds, your mission and designated funds, benevolence funds, and endowment and legacy funds. So you can keep all of those in mind. Now, as we look at the Treasurer's role in expenditures, it is important to remember, go to the next slide. That the session is entrusted with the responsibility to manage the affairs of the church, including the financial affairs. So the Treasurer doesn't control the finances, but is the person who's primarily responsible to ensure that the details of financial decisions are carried out. And the Treasurer does this by helping ensure that a budget is created to support the mission and ministry. They also help to ensure that the revenue that the church receives, whether it's gifts, grants, and rents, and what it spends, expenditures, are tracked and recorded so that the session and committees can know where you're at throughout the year, compare with previous years, and make adjustments if needed. The tracking and maintaining of the books can be done by the Treasurer, church staff, an outside hired accountant or bookkeeper, or a volunteer. The Treasurer is just ensuring that it's done and really overseeing it. It's important to know that tracking and maintaining good records help make completing annual government reports like the T3010, GST and HST rebates, and the PCC statistical forms, and also to be ready for audits or any financial review. And we'll look at some of those reports in January. It is very important that all church funds are handled carefully and with integrity. The bank reconciliation should be completed monthly. In simple terms, this is the reconciling or balancing the church accounting records to the bank statement or records. Getting into a routine can help keep your books up to date. If you each treat each month like a year end, then the year end report is simply another month end report. Barbara Fullerton, who was a colleague of mine, used to work with the United Church of Canada. She studied stewardship best practices and found that being open and transparent with finances was key to better revenues and giving in congregations. It's not why people give to the church, but it helps them to see how God is using the gifts they've been given and is a model for their lives. So how we handle expenditures and what they're spent on, what we spend the funds on, should reflect God's mission. After all, that's what we're doing. We want our budgets to read with grace, abundance, compassion. And we'll look at more of that in session 4. But I'm happy to turn it over to Morris now to talk about the Treasurer details. Oh no, actually, I'm not quite. I revised the order of the slides. As a bit of background, because it's going to come up in future ones, I wanted to say a word on a congregation's dollar base. Some of you may be familiar with this. I hope most of you are familiar with at least the words dollar base, but you may wonder, how do we get your congregation's dollar base? Well, it appears in the Acts and Proceedings, but this is how it's determined. So we take line 14, which you complete in the statistical report, and that's the total money received by your congregation from all sources to be used in a given year. Then we deduct all gifts to Presbyterians Sharing, PWS&D, other PCC mission, refugee sponsorship, and contributions to other Canadian charitable registration organizations. So that is the qualified donees. They have mission organizations. So that's in line 26. We also will take off any debt repayment, the principal and interest, which is line 24, and that'll get your dollar base. Luckily for you, all of that math is done and it appears in the Acts and Proceedings, and we'll come up to that. It's important to note that not included in your dollar-based revenue is the net sale of any property, endowments or bequests legacies or special funds, which are for use in future years. So as long as they're not used this year, but they're used in the future, as well as any Canadian ministry grants, and funds that are raised for major repairs and renovations or new construction, as long as the major repairs and renovations are more than 10% of your normal operating budget. So that's how we determine if that is can be not included as well. So we'll be looking more at the statistical report in January. Now I'm going to turn it over to Morris.
Good afternoon, good morning, everyone. The monthly budgets does not just take the annual budget and divide by 12. However, we need to take into consideration seasonal income dips in givings, like over the summer months, or highs like towards the end of the year when people are catching up with their donations or coming up to Christmas, or the number of weeks or the number of Sundays within a particular month. These highs and lows affect the church's cash flow, how much and when the funds are available for ministry spending. To determine the historical cash flow, using the monthly giving and expenses reports over the course of a year, you can currently take the monthly reports, add a column that compares the current month with the same month last year. At the monthly board meetings, or whoever is in charge of it, church leadership can then ensure that the spending is in line with the expected fluctuations in cash flow. The goal is that the expenses or the outflows do not exceed the incoming revenues or offerings, and any reserves that you may have, so that the ministry can thrive within your church. Stipends and salaries generally tend to be consistent month over month, except for the normal quarterly payments like of the H&D, or if one of your employees maxes out on their EI or CPP. But the likes of the utilities may vary with summer lows and winter highs. What you need to do is to make sure that you have sufficient funds in your account to meet the checks that you're writing. What you don't want to do is be writing checks and then find that you have no money in the account and they can bounce back on you. If it is an issue, what you can maybe do is borrow from one of your internal restricted funds, go to the bank and seek protection, overdraft protection from the bank while you sort out your problem. Or you can borrow from the PCC, something that you may not want to happen too often. Or it can be a serious problem. In our congregation, a number of years ago, we used to have a number of treasurers looking after each individual fund, and they all had their own bank account. And what we did was we consolidated all the funds into one bank account, and then we kept track of how much cash was in the bank belonging to the respective funds. If you can keep track of it, that's a good idea. Some want to keep them in separate bank accounts, but not required if you have a system of tracking. Next slide. One of the questions that had come up was, what's the difference between cash and accrual basis, and what's generally accepted accounting principles, or GAAP? In the Book of Forms, the treasurer must keep track of the receipts and the disbursements. Another way of thinking about this is what cash is coming in and what cash is going out. Many congregations maintain their books on what is known as the cash basis. I'm not going to go down through each of the slides here and through the items on the slide. You'll have it there and you can see the differences between cash and accrual. Other congregations keep their books on what is known as the accrual basis. A simple way to think of accrual accounting is to keep track of what is owed to the congregation and what the congregation owes to others at a particular point in time, like December 31st. In other words, you might have made a request for a grant from the federal government, or you may be waiting for your HST rebate, and that will be shown probably as a receivable. On the other hand, you may have some payables that you still haven't settled yet, or you may have a minister who hasn't taken his study leave, and you still got a liability for that study leave whenever he takes it, and you have to pay it out. So it's just a matter of setting up some principles as to what's coming in, what's going out, and whether you're doing it purely on a cash basis or on an accrual basis. And the Treasurer's Handbook, again, there's comparisons given as to what's cash and what's accrual accounting. If a congregation does not use the accrual method, but chooses to use the cash basis method, then the financial statements will not comply with GAAPT, generally accepted accounting principles. This means if you hire an external auditor, in other words, a non-congregational member, a professional accounting firm, to carry out an audit or a review, their report would have to be qualified that because of the financial statements don't comply with GAAPT. From my review of financial statements accompanying the annual statistical reports, most congregations use the cash basis. So should you panic or be worried? No, but for the larger congregations with significant assets and large amounts of revenue and costs, the congregation may require an external audit to be done. And in this case, they would comply with the GAAPT. It's not a good idea for most congregations. It would be a good idea. Sorry, it would be a good idea if most congregations move to GAAPT. Excuse me. Next slide. What comprises accounts? Basically, there are two sets. There's the assets and the liabilities, and those balances go on the balance sheet. And then there's the income and expenses, and they will go on the operating statement. There may be other statements required to be produced to account for the fund's activities. You may have restricted or unrestricted funds, like a mission fund, a man's fund, and accounting for any investments that you may have. What you may ask is what is included in assets would include cash or bank balances, fixed assets like of land, buildings, fixtures and fittings, less accumulated depreciation where appropriate, investments, miscellaneous accounts receivable, and possibly prepaids. Liabilities would include current liabilities, accounts payable, amounts due to creditors, say the CRA or the PCC, accrued liabilities, invoices that haven't been paid, but you've already received the goods and services and supplies, and the current portion of mortgage payments. That'll be anything within the next year would fall under the current liabilities. Long-term liabilities would include the mortgage balance that is over a year old, at least you've got over a year to pay it off. In addition, the liabilities will include the equity of any restricted funds and the accumulated surplus or deficit. That's to balance your balance sheet. Next slide. Each of these categories, you want a separate account for a lot of the expenses, but you've also got to watch you don't have too many accounts or it becomes onerous in the work that you do. On the Treasurer's Handbook, on page 28, they do list down a chart of accounts. Before the chart of accounts is set up, this is the listing of accounts with unique numbers and descriptions for the assets, liabilities, revenues, expenses. Some thought should be given to the end product, the financial statements. What categories or groupings of expenses should be reported? Would the congregation or the board of managers like to see more details or less details? Basically, major items should have separate general ledger accounts. Again, once you get the notes to these slides when they're sent out, there's also another source of information coming from the Free Methodist Church in Canada, where you can also see a guide for treasurers and their handbooks as keeping part of the accounts that they're using. A key part of the establishment of an accounting system is determining what general ledger accounts will be used. By accounts, we mean assets, liabilities, income, and expense categories. It is best to establish categories to properly allocate and distinguish items so as to easily generate reports, and not in so much detail as to be onerous. Again, important information to consider when setting up the general ledger chart of accounts and the categories used in the annual report. You've got to also consider how you can collect that information to be used to complete the T3010, which is submitted to the CRA, as well as when we're reporting on the statistical report. One of the things that I've done is I've created in the past, when I've been doing filings, is to create a worksheet, list down all the accounts from all the funds, add them up, eliminate the inter-fund transfers, and then coming up with numbers, and then I link those to the lines on the statistical report and also on the T3010. And I tried to do that so that I can be consistent month or year after year. Where practical, it's recommended that accounting systems be computerized. This makes the financial recording, reporting, and production of charitable receipts much easier. And there are a number of software products that are available that you can use. Again, some people still use a manual system, whereas other people use the Excel spreadsheet. On this slide here, you can see categories of expenses that would normally be listed within the financial statements, within the operating statement of an individual congregation. Now, again, some of these may have separate funds, but as long as you're keeping track of them, then you know what is available and what's not available. Next slide. Internal controls. The purpose of internal controls is to protect the reputation of individuals involved with church finances and to protect the church's assets. The church has a duty, or the congregation has a duty to its volunteers to protect them from unfounded accusations against which they cannot defend themselves. It is wise for the church to arrange its affairs so that the volunteers are not put into a position of unwarranted temptation. Internal controls usually involve dividing financial duties in a manner which creates checks and balances. A good accounting system must contain a series of checks and balances to ensure that monies and properties or other assets belonging to the congregation are properly received, adequately protected, accurately recorded, and efficiently used. The basic rule is that no one person should be in a position that they would have complete control over one accounting transaction. Next slide. Check signers checks should be signed by two individuals, two officers who are at arm's length with each other. In some congregations that I know, they have an amount below which a certain value, say $500 or $1,000 as a best practice, only one signer is required if it is below the specific amount specified. Signing a check payable to yourself as a trustee is not one of the best internal controls that you would have. Expenses should be compared to budget and paid only on the presentation of an approved invoice or voucher. Again, based on my experience, some congregations have the primary stakeholder, at least a committee chairman or a team lead, sign off and approve the invoice. In other cases, the invoice is attached to a check requisition and it's charged, it has listed on it the account that is going to be charged, the amount, and signed off by the stakeholder, approved by the stakeholder. And then that check requisition is also initiated by the check signer, initialed by a check signer. All church financial activity, including the WMS and the Atlantic Missions Society, youth, Sunday school, church camps, food banks, benevolent funds, must be included in all your records and also reported in the annual report, in your statistical report, and also on the information return that's going to the CRA. I think that finishes me.
I have a question here for you, Morris.
Yeah.
Why can't we use a standardized charter of accounts across all facilities? Wouldn't this make it easier to amalgamate reports from all congregations?
That would be a good idea if you can get someone, or if you can get the 900 congregations all to agree on the same chart of accounts. Each congregation is separate, but there are charts of account in the Treasurer's Handbook. And if you want to follow those, that would be fine. But again, depending on the size of the congregation and the number of accounts that they want to use and how detailed they want to present their financial statements, they will show or use different accounts or series of accounts when they're preparing their financial statements. A good idea, would be good to do, but again, you've got to get all the congregations in line and say, you must, and I don't think that's going to happen.
Okay, so now we'll look at the details of payroll issues. For many congregations, their largest expenses are connected to payroll in some way, so it's an important issue to cover.
So we have, in congregations, there are two categories of employees: the minister, professional church worker, and the non-minister. Each category may include staff who are employed on a full-time, part-time, or contract basis, though non-minister may also be employed on a casual basis. I was talking with Don Muir today and we were trying to think of ministers on casual basis and we couldn't think of an example for that. So it's really important to distinguish these, as you'll see when we begin to talk about benefits. So your ministers will include your ordained ministers as well as your diaconal ministers. And your non-minister employees are going to include your caretakers, your secretarial, administrative staff, bookkeepers, musicians, ministers in training, and other positions that don't fall into the minister category. Yeah, next slide. Oh, sorry. He advanced and I didn't advance mine. Just a sec. So your minister staff is going to be so now we get into what's important with your minister staff. So it's important to know that the General Assembly is the one who sets and defines the following categories. So the minimum stipend and the maximum qualifying income are set by the General Assembly, as well as what we should use for the cost of living adjustment, the rate for pulpit or Sunday supply, the health and dental benefits. The GA is the one who defined what appropriate accommodation is, as well as sets the basic travel and multiple point charge travel amounts, the years of service increments, as well as what should be used for students on annual appointments. Now, it's important to know, I'll just have a note on the COLA. So the 2008 General Assembly defined COLA to be the Consumer Price Index as per Stats Canada average on the year increases from June to May. According to the calculation, the COLA for 2021 would have been 1.6%. But given the implications of the pandemic on the church, the Assembly of Council approved on an exceptional basis that the COLA be 0% for 2021. So even though they define what COLA is, they can still say, okay, this is an exceptional year and make an exception. So that's what they did for that. And they also said, though, at that time, that's just the minimum. So they said that congregations could still consider adjustments to the stipend and allowances. Also, just of interest, the 2019 General Assembly adopted a recommendation that the minimum Sunday supply or pulpit supply be increased by $5 annually. So right now it's at $185 plus travel at 45 cents per kilometer for 2022. This just shows you what the minimum stipend grid looks like. I hope that most of you are familiar with it. You can find it in the Acts and Proceedings as well as online. Presbyteries can set their own minimums provided they exceed those set by the General Assembly. And you'll notice that there's 3 categories. So category 1 is for ordained ministers, lay directors of institutions. Category 2 is for diaconal ministers, lay missionaries with special training, and category 3 is just for lay missionaries. So now when we get to, next slide, when we get to the non-minister staff, we have our employees versus our contractors. So it's important to determine whether or not a worker is an employee or whether they're self-employed. If the worker is an employee, the employer is responsible for making statutory deductions, including CPP, Canada Pension Plan, employment insurance, and income taxes, and for remitting them and the employer's share to the CRA. If the worker is self-employed, they are considered to be operating a business and statutory deductions are not required. They must show you proof of their HST or GST registration. Okay. Now, there's a lot of factors that are considered when to determine whether somebody is an employee or a contractor. And the CRA on their website includes this list of questions, which they look at when they're trying to determine if it comes to them, is this person really an employee or they're a contractor? So it includes everything from the level of control that the payer has over the worker's actions, to the tools and equipment that are being used, whether work can be subcontracted or they can hire assistants, the degree of financial risk that the worker undertakes, and the degree of responsibility for investments and management. So those are just sort of the questions they have. But for each category, when they deciding whether somebody is an employee or they have a lot of other control indicators. So we'll just go to the next slide. These you'll get when we send out the link, and we are putting the notes and the PowerPoints up so you can look at these in more detail. But I'd really suggest going to the website if you're having struggle about determining, is this person, should we treat them as an employee or are they a self-employed person? So, but for example, you'll have the control indicators would be things like, is this position one of subordination? How much decision control do they have over the decisions and the way that they're doing their work? Control is the ability, authority, or right of a payer to exercise over a worker concerning the manner in which the work is done and what work will be done. And so it examines things, they examine things like the degree of independence that the worker has. The actual degree of control will vary with the type of work and the skills of the worker. It can be difficult to determine for professionals such as engineers, doctors, and IT consultants, because their expertise and specialized training, they may need little or no specific direction in their daily activities. So it's just examples. And we'll go to the next one that just shows if you're self-employed. Usually the self-employed person, for example, works independently. They don't have someone overseeing their activities. They're submitting an invoice and you're paying for the product that's received. Next slide. The other types of things they might look into are the tools and equipment. So who owns the tools, who supplies them, what are they, what right do they have? Are they doing the repairs? All of those types of questions. So if you're wondering, is this person supposed to be an employee or are they self-employed? These are some of the things that you can dig into. Next. So the question is, now you've got determined, okay, we know the people who are employees for this congregation. So whether they're full-time, part-time, casual, or contract basis. So the congregation must withhold, oh, I'm starting somebody else's slide.
Go ahead.
I'll finish the slide and then I'm turning it over to you.
Okay.
So where you've got your employees, the congregation must withhold and remit the taxes and other premiums required for the, they have to keep records and file the tax forms, and then they have to produce a T4. Hopefully most of us have had T4 in our lifetimes. Well, the employers have until February 28th to give the employees their T4. The employee gets 2 copies. 1 copy is sent to the CRA with the summary, and 1 copy is kept in the office with a copy of the summary. And you can file either electronically or via paper. Now, those are for your sort of full-time and part-time employees. For your casual, contract, and honorariums, you need to produce a T4A. And you can send a summary of the T4s and the T4As that you've produced to the CRA on or before February 28th. And I'll do the next one, Oliver, and then pass it over. So just a note on the T4As. The T4As are produced for contract. That is anyone who've got working with you who doesn't have their GST or HST number. The casual employment and honorariums. For aggregate amounts that are over $500, or if taxes were withheld and remitted. In order to do the T4A, you need to obtain the name, address, and social insurance number of the recipient.
Karen, there are a few questions. Would you like them now or should we wait until the end?
Sure, go for it now and I'll let somebody else answer them.
Okay. Should we be increasing the stipend and housing allowance by the COLA amount?
Yes.
Okay.
I believe so.
Okay.
I will confirm, but I believe so.
The amount published in the ANP already adjust for the COLA. So you don't need to increase it by whatever amount. But those are minimum stipend. Congregations are allowed to pay more than the minimum stipend. Minimum stipend is the bottom minimum.
I think that once you start them at the minimum stipend, then there's steps that you're supposed to do every year, and that becomes the minimum for the person. So as long as you're paying at the minimum and at the proper step level that the person is at, yes, you can look at the minimum for that year, but it'll be from whenever, it will be increasing by COLA.
Okay. Treasurers get a lot of emails regarding pension and health and dental. I'm wondering if it's possible to get the COLA and pulpit supply information also emailed to treasurers.
Yes, we will take note of that. I think that we can probably come up with a system to do that. We've been working this past year on integrating the communications that we have with treasurers. So we'll keep working on that and take that under advisement. Thank you.
Yeah, we do, I'll add in as well, when we do send our notices to treasurers from the Pension and Benefits Office, the treasurer memos that go out every fall, we do include an attachment for the minimum stipend schedule in that notice, but I can see where they may want more information on pulpit supply.
Okay, and a comment that COLA is applied to the stipend and not the housing allowance.
Okay, thank you.
And where do people obtain the T4 or T4A forms?
From the government website, just download it. Search for TD1 or T4. Oh, T4? Yeah, it's also from the government website.
Okay, and our ministers, oh, sorry, go ahead, Morris.
Housing allowance is also subject to annual increases.
Okay, great.
Just answering that last question as well.
Sure.
Thanks.
One final one, are ministers automatically considered to be self-employed?
No.
Ministers, in fact, it's the opposite. Ministers are employed by the Congregation of Presbytery. There's the, but they're employed by the church.
By the congregations. Thank you.
Prepared by the congregation, but technically they report to the presbytery.
Yep.
Okay, and that's everything for now. Thank you.
Yeah, so I guess to answer that with the employees, that's why you have to do all your deductions for your ministers as well. Go ahead.
Okay. Okay, all persons receiving a stipend or salary from the congregation should complete both federal and provincial TD1 forms. The TD1 forms are personal tax credit, return for federal and provincial income tax. And from these forms, the claim for exemptions for federal and provincial income tax purposes is determined. The TD1 forms should be completed at the start of the employment and whenever there are changes in the status of the employee. For example, if there's a new dependent or your marital status get changed, then you update the TD1 form. There's an online calculator that is provided at the CRA website where you can calculate the correct amount of deductions for CPP, EI, and income tax. And you can visit the website and that will give you more information. Another resources we have provided is a spreadsheet that will allow you to track the payments through the year and make it easier to complete the T4 or T4A. And you can contact the financial services for more information related to that. Next slide.
Okay,
so
Nicole. Yeah, it's me now. So we'll talk a little bit about pension and benefits. And so in your role as treasurer, you'll have a number of remittances and administration tasks that you'll be preparing for the Pension and Benefits Office, and those will be related to a number of these items. So the pension plan, you'll be, if you have a member, a clergy, whether it's a clergy person or a non-minister employee, you would be making remittances to the Pension and Benefits Office for their deductions for the pension plan. So you'd be calculating the pension deductions from their payroll and remitting it to our office. We'll talk about how to do those calculations a little later on. You'll also be making remittances for health and dental. So that is an employer paid benefit and is charged to the congregation on a quarterly basis and provides medical and dental assistance for employees and family members. You'll also be making remittances for group life insurance and long-term disability, which we call group insurance on our remittance form. Those are employee paid benefits and are deducted directly from the payroll. And sorry. So again, you'll be making those remittances to our office. And then if you have a member who, and some of you may have already dealt with this, or maybe may have somebody up and coming for maternity parental leave benefits, you'll be applying to our office. You'd be paying those benefits through the top-up program and applying to our office for the top-up benefit. So we'd be working with you on that as well. And then also pulpit supply insurance. We touched on that a little bit before, but if you have a minister who is either away, cannot perform the duties of their job due to illness or injury, and you have to hire somebody to come and do Sunday supply for you, you can claim pulpit supply through our office, and that can be claimed up to a maximum of 17 weeks, and we can help you with that top-up program. Okay, so those are kind of like the remittances that you'd be doing with the Pension and Benefits Office. Just to give you a high-level overview, the pension plan itself is a defined benefit plan, and it is mandatory for all clergy members, all ordained and diaconal ministers of the church who are employed. It is mandatory for them to participate in the plan. It requires both both employee contributions, deductions from their payroll, as well as employer contributions. The congregational assessment, pension plan congregational assessment, is the employer contribution for clergy members. And then there is also another calculation that we use for non-clergy members, which we'll get into a little bit later on. In your role as treasurer, you'll also, if you have a member in the pension plan, you'll be calculating what's called a pension adjustment every year, and you'll be reporting that on their T4, and we'll talk about how to do that a little bit later, as well as reporting their RPP contributions on the T4 as well. We rely heavily, we wanted to add this in there just because we know we send out a lot of communications to our treasurers, and we know how important your role is, and we appreciate you so much. And we want you to know that we rely heavily on you, your presbytery, your sessions, the whole congregation to communicate with us whenever there are changes. We do have to communicate to Sun Life, to the plan, you know, we do the administration of the plan. So if there's going to be changes, whether there be a new enrollment, if there's going to be some movement between one congregation to another, if there's a retirement coming up, somebody's being paid a transitional allowance, we need that information so that we can actually start processing those benefits on our side. And we know that you don't always have that information in advance, but if you do have it, or you know it's up and coming, we do ask that you please contact us and let us know, or even poke at your presbyteries a little bit to send the information to us. Next slide. Leanne's going to talk a little bit about enrollment. So I'll just kick it on over to Leanne.
Just a quick question, Nicole.
Sure.
What happens when the minister retires?
So we'll talk a little bit about vacancy. I'm assuming maybe they're asking about contributions and what stops and what doesn't.
I think so.
So the deductions from payroll obviously will stop with the last pay. So no more group insurance, no more pension deductions. The health and dental premium does continue for 6 months after the start of a vacancy. That does help support other programs that are paid through the health and dental fund. The maternity parental leave is one of them. The pulpit supply insurance is another, just to give you an example of why that continues. And the congregational assessment is required of every congregation, whether they are vacant or not. So that continues indefinitely. I don't know if that answers the question, hopefully, but now I'll kick it over to Leanne, and if there's more, just let me know.
Thank you. Okay, so the enrollment in pension and benefits for the PCC, all ministers and PCC recognized ministers, so those are the ministers from another denomination that have gone through education and reception. It's compulsory for them to be on our pension and group benefits plan. So there's the pension, group benefits includes health and dental, and the group life insurance. The minimum requirement for the pension plan is 8 hours per week. So if they're part-time, as long as they're working 8 hours a week, they are able to contribute to their pension plan. For group benefits, so the health and dental and group life insurance, the minimum requirement with our provider is 20 hours per week. So if it's a minister or staff, they must be 20 hours a week to be eligible for the group benefits plan. All ministers are covered under the congregational assessment, which is calculated based on your church dollar base, which I think we're going to get to the calculations a little later on. So that would include if you have one minister or two ministers, all the PCC ministers are covered under the congregational assessment. And the health and dental and group insurance premiums, the group insurance premiums are paid by the member. The health and dental is paid for by the employer. Non-minister staff that we went over earlier, The congregation has the option to offer pension and group benefits, pension only or group benefits only to their non-ministry staff. Pension contributions are required by both the employee and the employer. The employee is not covered under the congregational assessment. There is an additional percentage of their qualifying income that goes to the pension plan for those employees that go onto the pension fund. And those calculations will come a little later on. All eligible employees that are working the 20 hours a week, they can be offered group benefits. However, if there are more than one employee working in the congregation that is also 20 hours a week, they also must be offered or given the same benefits. So all employees in the same classification have to go on to the group benefits plan. Next slide. The deductions. So the deductions for members on the pension and group benefits plan. So if you are on pension and group life insurance, those deductions must come off their salary or stipend and then remitted to us on a monthly basis. The calculations for what it would cost for the pension and group insurance will be covered a little bit later on in the slides.
Here it comes. So if you have an employee or minister on the plan, then you will be calculating out their pension deductions. For 2022, the pension percentage is 8% of the member's qualifying income. The qualifying income is calculated as the basic stipend, so the stipend that you're paying your member for ministers, plus 60% in lieu of housing and allowances. So you don't add up line by line what you're actually paying them in housing and allowances. You just say stipend multiplied by 60%, what's the total? And then we have an annual maximum. So if that total exceeds the annual maximum, which in 2022 is $75,840, then you would be making your deductions based on that annual maximum. So it would be 8%. Let's say you do the calculation and the member goes over, it would be 8% of 75,840. And then you would divide that out by 12, and that would be your deduction every month, and you would be remitting that to our office. If it's under the max, then you would just be taking 8% of whatever your stipend plus 60% is. For non-ministerial staff, it would be the salary amount that they are being paid plus the health and dental premium if they're on the health and dental plan. If they're not on the health and dental plan, then it's just the salary, 8%. Again, the same annual maximum applies, and you divide it out by 12, and that will be your deduction. So if they're under the max, again, it's just whatever the salary is times 8% divided by 12, and then you make that remittance. If your member is working less than full time, then you would be prorating that for the percentage of time that they are working for anyone who is at the max or above. Okay, so that's the employee contribution. Then there is the pension plan congregational assessment, which is the employer's portion for all ordained and diaconal ministers. And as I mentioned before, this is required whether you are vacant or not. It is based on the congregation's dollar base reported on the annual statistical report, which Karen talked about a little bit earlier. The assessment for 2022 is based on the dollar based used in the previous 2 years almost is kind of how we look at it, or if you want to look at the previous year's acts and proceedings. So for 2022, you'd be looking at your dollar base for 2020, and that dollar base is reported in the 2021 A&P. I know that's really confusing. We try to say it a million different ways because it's it's really hard to kind of find what you're looking for, but we hope that maybe this slide will give you a good sense of where to look for your dollar base if you're not sure which one applies to which year. So specifically, if we're just looking at 2022, you're looking at your 2020 dollar base, which is found in the most recent ANP, which is the 2021 ANP. And that's what your assessment is based on. We send that out every November to our treasurers. And then for budgeting purposes, we just say, we send you an email and we say, hey, this is what your 2022 assessment will be. And then in January, we do typically send out another notice just to remind you and to say, this is your assessment notice. We also kind of add a little more into it and say, this is where you ended off the year at in 2021. And if you have any outstanding balances, please remit them immediately. And then this is what your payment schedule is monthly. These contributions, it's really important. And I know I've said it probably a million times already, but they are due on a monthly basis. It is a regulatory requirement. It's not because we want to poke at you too much. It's because we actually have to report these contributions to the regulators on a monthly basis. We have a requirement to report to the trustee, and our trustee, if we don't actually make those remittances, can report us to the regulators. So they are due on a monthly basis, and they must be remitted to our office. Next slide. Another part of your role is calculating the pension adjustment. We get lots of questions at T4 time saying, can you just tell me what my minister's pension adjustment is? And so basically, when you have a plan member who is part of a pension plan, the PA reduces their RRSP contribution room because they have membership in a pension plan. So you have to do this calculation to report what the value of the benefit is. So for a defined benefit pension plan, the formula for the PA is basically you take the qualifying income, which we've talked about how to calculate what that is in an earlier slide. You multiply it by 9, you multiply it by the plan benefit, which is 1.5%, and then you reduce it by $600, and then you get your PA. It is capped. The earnings are capped at the annual maximum. So the same maximum that you're using to make your deductions, you're going to cap it the same way when you're doing the PA. So if your member is earning over the 2021 maximum, which was $74,880, their PA will be $9,509. Cannot be any higher than that. PAs must be rounded to the nearest dollar. And so they're not looking for any cents on the end of that. And they are reported on box 52 of the T4, along with the RPP, the Registered Pension Plan Contributions, which are the deductions that you've made from the payroll. That would be reported on box 20 of the T4. Now I'll move it on over to Leanne to talk about health and dental benefits.
Sorry, Leanne, just a quick question. Should the step increase for ministers continue after 8 years of service?
That I think it's the COLA, basically. I think they continue to receive COLA. I believe that's correct. They continue to receive the COLA benefit.
Okay, and one more. Will we be talking about CRD and tax deduction calculations for monthly pay today?
That probably would be payroll.
What is CRD? You mean CRA?
Doris, can you clarify? Oh, clergy residence deduction.
We will talk about that later.
Thank you.
And I just wanted to make one other little point to Nicole when she was talking about the contributions coming in on a monthly basis. It's not just the congregational assessment, it's anything to the pension pension plan. So member pension and group insurance, they all have to come in on a monthly basis.
Yeah, it's all regulated.
Or else you hear from me. Okay, so health and dental benefits. We have a really good plan with Sun Life Financial for all of our active employees. It covers prescription drugs, paramedical services, medical services like hospital care and equipment that you might need to either purchase or rent. Dental benefits, so we have a pretty good dental plan as well. And out-of-country emergency medical coverage for the minister and their dependents. I do get a lot of questions about that, whether or not their spouse is also covered under their out-of-country or their children. So any children under the age of 22, as long as they're not married and fully dependent on you, all your dependents are covered under our plan for all these benefits, including the out-of-country medical. Children over the age of 22 to 25 can be covered as long as they are full-time students in a college or university. And in some cases, emergency out-of-country medical can be extended if any of their children are studying outside of Canada. For any information on that, just contact our office and we can give you further details on that. Next. Okay, so the health and dental premiums for 2022 is $4,684 per position. In Ontario, we add on an additional 8% PST, and Quebec has a 9% QST tax on top of that. It's invoiced by our finance department on a quarterly basis, and the payment is made to the finance department. The payments for health and dental should not be included on your pension remittance check because they do go to two different departments. So I think Rebecca will be talking about that a little bit later on. But because they're two different departments, we do like to keep those separate. The benefit, the premium, if you have somebody working part-time, the premium is not prorated for part-time employees. It is the one cost per position, regardless of how much they're working. When a position becomes vacant, so if your minister leaves or retires or a staff member leaves or retires, the congregation is responsible for an additional 6-month vacancy premium that goes back into our fund, and that's what helps us pay for other benefits like maternity leave top-up and pulpit supply. And then there's a note that in Quebec only, health and dental premium is a taxable benefit which goes on the T4. Group insurance. So the group insurance provides the member with life insurance on their life, dependent life insurance for each eligible dependent, and accidental death and dismemberment, which is called AD&D, and long-term disability, which is LTD coverage. To be eligible for group insurance, you have to be working the minimum 20 hours or more. And again, any employees that are 20 hours or more that are in the same category, so staff must also go on the, all employees must be added to the group benefits plan. The premiums for the group life insurance are paid for by the member so that they are a tax-free benefit should it need to be for LTD purposes or for a life insurance payout. The beneficiary will not be taxed on that. And for 2022, the rate is 2.2% of their qualifying income. And in Ontario, there's an 8% PST, 9% in Quebec, and 7% in Manitoba. The rest of the provinces, there's no tax on that. Okay. I think that covers everything on that. Does that cover everything on this? It's cut off on my slide.
Yeah, I think you got it.
Can I just interrupt you for a sec, Leanne, with a question? Is group insurance mandatory for all churches?
Group insurance is mandatory for ordained ministers. So any ordained minister or PCC recognized minister that we had indicated pension and group benefits is compulsory. Yes, it is. Group insurance and health and dental is our group benefit plan, and it cannot be separated. So if you're putting a person on group benefits, they're going to get both health and dental and group life insurance. So together they go hand in hand. For staff, non-clergy staff, if the congregation would like to offer them the group benefits, which includes health and dental life insurance, they can do that. Does that answer that question?
Thanks, Leanne.
Great. And just to add to that, it's mandatory for ministers and diaconal ministers, but they do have to still meet the 20-hour minimum requirement. So that's part of our Sun Life policy. So anyone working less than 20 hours actually is not eligible for benefits. You have to meet that 20-hour minimum first. Now we'll talk a little bit just about long-term disability. Just wanted to kind of give you a high-level view of what coverage is, because you are obviously making some deductions from their payroll for this. It is part of the 2.2% group insurance rate that Leanne was talking about earlier that the member pays for. It provides coverage for salary protection, basically if they are off work and unable to perform the duties of their job due to illness. It will provide up to 60% of their pre-disability earnings, capped at the annual maximums, for LTD coverage. There is an elimination period, which means they have to be off work, unable to perform the duties of their jobs for a consecutive amount of time before they can actually apply for these benefits. For ministers, it's 210 days, which is equal to roughly 7 months. And for non-ministerial employees, it's 119 days, which is about 4 months. In the interim, if you have a minister that's going on sick leave or is on sick leave, in the interim of the 210 days, while they're in that middle period from day 1 to day 210, you would be looking at the PCC sick leave policy for coverage. For ministers, there is a sick leave policy that kind of gives you a guide of what you would need to pay, which is basically all of their salary and allowances or stipend and allowances would be paid for the first 3 months. And then between month 4 and 7, you'd be covering housing. And then after that, they would be applying for LTD benefits. If it's for an employee, you'd be looking at your congregation's sick leave policy for what type of coverage they would be getting in that interim part. Okay. That's the LTD benefit. Going on to WSIB, this is an insurance, workplace safety and insurance that is in Ontario only and does provide some wage loss benefits and medical coverage for work-related injury or illness. So this coverage is only available, if you have it. It's optional. It's optional for congregations. You don't have to have it, but if you do have it, it would provide some coverage for work-related injuries. So this is different from LTD, which just covers illness in general. This would be specific to my employee or my minister got injured at work, and I have coverage through WSIB, and you can claim that. So it's an added benefit. It is available, and some congregations have it, many don't, but it is something that is there and available. In the absence of any of these coverages, the member can also apply for EI sick benefits, which are also available through the government and would provide some interim relief before they could apply for, let's say, LTD benefits if there was some income, if they needed some income replacement during those periods of times. Moving on to vacancy periods. I think I've talked about this probably ad nauseum, so I won't highlight it too much more, but just again, letting you guys know that when your congregation becomes vacant, probably an important piece of information is when does my congregation actually become considered vacant? And so when your minister resigns, when you are no longer paying a stipend or salary or benefits to a member, that would be when you're actually considered vacant. The pulpit itself could be vacant before you're actually done paying for salary and benefits. So that's something to just keep in mind, in that when you're paying a transition or a severance of some sort, that goes on for, let's say, 4 months or whatever the period of time is. If you're covering that person for benefits and pension, that means that we are being charged by the insurance company for that, and we also have to, so those premiums are still due. So you're technically not vacant until the end of that. And that's when the vacancy period starts. So we get a lot of questions about that, and just wanted to kind of help you understand when the vacancy period starts. And then for congregational assessment, as we've said before, that just continues whether you're vacant or not. I think that covers it all. And then we have this nice little chart we thought might be helpful for you, just with the maximums, deductions for both 2021 and 2022. It highlights the percentages. So we have the CPP maximums for employee and employer. We have the EI maximums. For the PCC pension plan, what the congregation payments are, what the maximums are for the minister as well, for the group insurance plan, and what the health and dental premiums are. So this is kind of like your catch-all chart that gives you an idea of what the percentages and the maximums are for this year and the upcoming year. And I think that's it. I'm going to pass it on over to either Carol or Oliver, unless there's any questions for me before I move on.
Looks like we're good for questions. Thanks, Nicole.
No problem.
Before Oliver goes on, I'll just say we're at 3:15. We're going to keep going. We certainly understand if people have to leave, and you'll get the recording later, but there's still some more material, so we'll just keep covering it for people.
Okay. Ministers are eligible to claim the clergy resident deductions to reduce their taxes payable to the government. And this slide is actually the instructions that you have to follow. And also the instructions on the forms are very clear. So you can just follow the instruction and complete it. And you have to complete the clergy residence form by November of this year in order to reduce the tax for next year. So for Part A and Part C, they are completed by the clergy person. And for the employer, you can only have to complete Part B of the form. And on Part B, make sure that the employee's job title are completed, and to attach a job descriptions and duties related to the clergy person. And for minister, you have to attach a copy of ordination certificate and the name of the congregations. So this form is, the form is pretty much a self-explanatory. You can just follow it and complete it as the best you can based on the instructions. Any question on it?
Looks like we're okay.
Yeah, this is the example that you have to complete on the form. And CRA normally require 4 to 6 weeks in order to assess your application, and they will send you a confirmation so that you can make the tax reduction for next year. Any questions? Yep. Nope. Okay. Next.
The CRA, we've talked about monthly deductions. Again, deductions that are coming off the payroll need to be made by the 15th of the month following your end of the month where you made the payments and took the deductions off. However, I've got some good news. If you have a good history of making your payments or your remittances to the CRA on a prompt basis and on time, you may be able to qualify for making your remittances on a quarterly basis rather than a monthly basis. But again, it depends on your past history of remitting the amounts that were deducted from the payroll on a timely basis. It's something that the CRA monitor and will then advise you that you don't have to do it every month, but you can do it on a quarterly basis. The other item that we've talked about, or we will talk about in the next seminar, is the charities, the registered charities information return. There's no monies required in that, it's just a reporting, and we will talk about that on the next webinar. Next slide. Here's another chance to get some income coming in. The matter of, on this slide, the important thing is that you ensure that you get your GST or HST rebate is claimed at least once and possibly twice per year, so that you get that money coming back into which you're entitled. One of the things that I have found as I looked at various congregations is the differences in how the HST and GST is reported. I've got several examples here, and I'll just go through them very quickly regarding the recording of the taxes. The first example is a congregation that's on a cash basis. The total transaction is to be expensed. Say it's $100 plus the HST at $13. So we've got a transaction total of 113. When the claim rebate is made and the rebate received, the amount is either credited to other income or the credit is made against the total expenses. In other words, people just take the full amount that they paid, treat that as being an expense, and then at the end of the year or maybe into the new year, they go through and make their claims. So that kind of way increases or boosts the costs that are being incurred on a particular transaction. The next item is where a congregation credits the bank account for the total of the transaction, $113. It debits the expense with $100 and then debits the HST rebate receivable account on the balance sheet for $13. Then when the rebate is claimed and the money is received, the difference, the non-rebatable portion, the $3.94, that's based on Ontario, is written off as part of the expenses. So in this case, they keep the track of the HST, and then when they make the claim, they're not going to get the full amount back that they've posted on their balance sheet, and so they write that off as an expense. The third item becomes even more complicated, and it's very onerous to do the transactions in the way I'm going to describe them, but I've seen congregations do this as well. Initially, the bank account is credited for the total transaction. The expense account is debited with the transaction cost, say $100, and they do an additional calculation for the non-rebatable portion of the HST, which is $394. And then the balance is debited to the HST rebate receivable account, the $9.06 on the balance sheet, which is then credited and the rebate cash is received. So there are numbers of ways of trying to handle this. I've seen at least these three. There may be more, but if you're asking me which one would I recommend, I would say probably go with recommendation 2. Okay, on housing loans to ministers. Again, we've been talking about the call of minister, who are the ministers responsible to, etc., etc. The approval is required by the presbytery, or approval is required of the presbytery if you're going to sell your manse. Now that will then also impact the minister, whether he receives a housing allowance or if he's going to maybe buy his own house. But the sale of the manse needs to be approved by the presbytery, and since it affects the call of the minister. The housing allowance would need to be for appropriate accommodation in the community. Within the Presbytery West Toronto, when ministers are renting properties, we use the lesser of the actual rent paid or a specific housing allowance, and those are the rates that we set year after year, similar to what we've seen earlier on with regarding the General Assembly setting the stipend rates. Alternatively, the minister may seek to purchase his own accommodation, and in this case, the terms and conditions of the loan, if the congregation is willing to give him a loan, to assist in the purchase of housing. And again, we've had a minister that has gone through this recently. So the terms and conditions of the loan to the minister are listed down, written up, so that we've got a contract that specifies the amount, the date, the repayment term, and the security. These all need to be documented. The eligibility for housing allowance is strictly for long-term ministers or ministers who are inducted as professional church workers. It's not someone that you're going to lend money to all the time. So there's got to be a minister. And again, when you get the notes to these financial statements, you will see a link to on the website that lists down some more details on the housing loans.
Hi everyone, this is Maggie, and I'll talk briefly about the Presbyterian Sharing and other mission that our congregations are supporting quite a bit. And for Presbyterian Sharing, it supports the overall mission and ministry of the Presbyterian Church in Canada. Through Presbyterian Sharings, we support one and other ministries. We help start new congregations and renew others. We collaborate with mission partners around the world. We learn together, share our experiences, and establish healthy ways of working together. We work with theological students, and we speak out on matters of justice. Presbyterian Sharing supports international ministries, Canadian ministries, justice ministries, ministry and church vocations, stewardship, planned giving, and communications. It also supports the work of the General Assembly, financial services, and the theological colleges. So what is the difference between your congregation's Presbyterian Sharing allocation, the presbytery and synod assessment, and the pension plan congregational assessment? So Nicole talked briefly where you can find your congregation's dollar base, and it is in the acts and proceedings of the previous year. And the dollar base that is used in the 2022 allocations and assessments is calculated from your congregation's statistical report from 2020, and it is found in the 2021 acts and proceedings. And briefly again, it is the normal revenue minus expenses for mission and capital renovations and debts. And so gifts to Presbyterian Sharing supports the mission and ministry in Canada and around the world. we do together as the Presbyterian Church in Canada.
Hey, Maggie.
Yes.
I'm going to take over for this slide.
Oh, sure. Yes. Please
No,
go
just
ahead.
because the main thing we wanted to do is to highlight that there's two allocations. One is the recommended allocation, and that's the one that comes from the General Assembly. And a number of years ago, the General Assembly recommended that congregations support Presbyterian Sharing with 10% of the congregation's dollar base. Now, that will hopefully have gone to your congregations. We send it to the presbytery and they disperse it to the congregations. Then the session takes the recommended allocation and recommends it to their congregation where they accept the allocation. And so the accepted allocation is what the congregation realistically thinks that it can give. So there's a lot of grace built into this formula. People are expected, we hope that they'll engage in the mission and ministry that we do together. 10% was chosen because it's a tithe, and it was felt that it was a number that realistically congregations could support the mission and ministry of the church. But we know that there's a lot of different circumstances for congregations, particularly in these years. I mean, when this was decided, we had no idea that COVID was coming. And so we know that many do struggle. So the congregation can report back what they think that they can give. And we record that. If circumstances change during the year and they're still not able to give what they accept, then that is still understood. It's great if people can let us know the reason why. But also if they've had a really abundant year and they're able to give more to Presbyterian Sharing, that's always appreciated as well. So people can give 10% or more of their dollar base. And we have congregations that do. So I'm always really encouraged by that. We'll go to the next slide. The other PCC mission is also, of course, you can support mission in many ways through the PCC. And I'm always astounded at year end when we receive the gifts. So Presbyterian World Service and Development, through gifts of change in the giving tree, congregations and individuals may support special projects of international ministries and Canadian ministries. And there's a lot of other funds of the church that you can find online. And of course, there's the tremendous work that is done by the Atlantic Mission Society and the Women's Missionary Society. So I think we belong to a very generous church. Now, when it comes to mission and ministry, of course, there's even more that congregations are involved in. And I'm always really astounded by that. So the ways that congregations, and we covered this last week, can do mission and ministry in their community, in their country, or around the world. It can be carried out by your staff and volunteers, and you would see the expenses for those in the detailed expenditures of your budget and your committee's budgets. It may be completed by giving a transfer, by giving funds to other qualified donees, and a reminder that most of the qualified donees that congregations support are ones that have charitable registration numbers in Canada. Or you can also have ministry and programs that aren't done by qualified donees, but that the congregation has direction and control over. And you would also include those finances on your congregation's reports. Next slide. And so in that example, you can carry out your own charitable activities using the intermediary. And so you might hire a company or a private contractor, let's say, to run your VBS, for example. Or you might have an agreement with another nonprofit organization, or you could pool resources with a few other churches, perhaps, to complete a project together. So those are if you're using an intermediary. But just remember, you still need to maintain direction and control over those funds. So next slide. When you have direction and control, means that the church is making the decisions and setting the parameters. So the church might do this by appointing a committee to overdo an activity, and so they appoint the people who do the committee, and then the committee may run and run almost independently, but they'll report back the finances to the church. And it's really the church, by appointing the committee, they're still the ones that have direction and control over the overall goals, how it's carried out, where and when the activity will happen, who it will benefit, and when it will begin and end. Next slide. Some of the things that you can do to make sure that you're maintaining direction and control is having written agreements, being sure that there's ongoing communication and direction, having excellent record keeping. And so you might have separate accounts, but you've got those all really well done, and making sure that there's periodic transfers of resources based on demonstrated performance. But these are still your mission and ministry programs. It's just that somebody is helping you carry them out. Right. Just a word on presbytery and synod assessments. Presbytery and a synod assessment is a congregation's portion of the presbytery and synod expenses. It contributes to regional and presbytery staff, camps, meetings, and other programs. It's determined differently in different regions, so depending on your presbytery. A lot of them include dollar-based in the calculations somehow, and some of them also have something that does with membership numbers. And it could be paid quarterly or monthly, depending on the presbytery or synod. Now, what we really want to remind you, and you can remind your congregations, is to send their payments to the presbytery or the synod. Because often at the national office, we'll get, oh, this is our assessment for so-and-so presbytery. And so then we have to do a journal entry and issue a check to that presbytery. It just delays the funds. All right, I think I'm going to turn this over now to Rebecca, who's going to talk about remittances making your remittances to the PCC.
Thank you, Karen. We have several different ways that remittances are received at the national office. There's the health and dental invoices, which are sent out quarterly at the first of the quarter. The pension and insurance contributions, Presbyterian Sharing, PWS&D, and other missions such as Canadian ministries and international ministries, and any lending fund payments. Your minister's health and dental invoices and your pension and group insurance contributions, as Leanne and Nicole have already mentioned, are mandatory payments, and failure to pay these could result in the minister losing their benefits. So please make sure that you send in these remittances, and the health and dental is paid separately from the pension benefits and also separately from Presbyterian Sharing and PWS&D and lending. Next slide. We have several different ways that you can send remittances to the national office now. COVID has opened up a couple of other opportunities for some of the congregations. We are receiving fewer and fewer checks in the mail now because Canada Post is quite frankly losing more and more checks in the mail. So you can send an electronic fund transfer, or EFT. This is a bank-to-bank transfer. We are not set up at the PCC national office to be able to accept an Interac e-transfer, which is commonly used via email or a cell phone number. We can't accept that, but we can receive an electronic funds transfer, or EFT. To set this up, you would need to go into your bank branch and give them our banking information and just ask them to do the transfer from your account directly to ours. You can also do, if you bank with Scotiabank or with RBC, we are set up as a vendor, so you can do a bill payment if you have online banking with your account. Well, let's see what else. The next one, if you're sending us a check, again, please remember that health and dental is a separate check. Pension and benefits is a separate check. You can send one check for Presbyterian Sharing, PWS&D and other missions, and lending fund. I'll also mention here that WMS is a separate account as well. So if you have contributions for them, please send a separate check. Go on to the next slide. This is the old remittance form with one addition to it. This was typically sent out at the toward the end of the year on bright yellow paper, and you would mail these in with your payments for Presbyterian Sharing and PWS&D. Now you can just download these off of the resources page and print them out and mail them to me if you are sending a check. These are only for Presbyterian Sharing, PWS&D, or other missions, and lending fund. We really need to have these filled in completely. Please always remember your congregation code, which is an alphanumeric code. It starts out with the initials of your presbytery, so 2 initials and 3 numbers. I do on occasion receive just the 3 numbers, but remember, if your code is 010, there might be a WT 010 and an NS 010. So there are many presbyteries across the country. Always remember to have the entire code there. It's always a good idea to put your congregation name on there as well, because we can't always match everything up. Okay, sorry, next slide.
Oh, Jim,
Yep.
if you go back for a second, I just want to add something briefly. When it says other designations, as Rebecca said, you can include the other things like for Gifts of Change, your Gifts of Change project, or an International Ministries or Canadian Ministries special project. You won't necessarily know our account fund for that, but if you can include as much description about the project. So if it's Gift of Change, include the code number, or if it's you know that it's going for Jobat Hospital in India, put Jobat Hospital in India, then we can figure out where it's supposed to go.
Jobat is WMS. Send that check to WMS, please.
Yeah. So, okay, you can go to the next one, Jim. Thanks.
Okay, so this is a copy of one of our pension remittance forms. So this is a sample for all PCC ordained diaconal and congregational assessment. This used to be on smaller paper in green. So this is the equivalent of that. So on the form, like Rebecca had said, we appreciate the full code, the employer's name. It'd be helpful if you can put the treasurer's name and email address on there. If you know that you are a new treasurer, it might be helpful just to highlight it and just let us know, because we do have a program that we keep all this information. So it's very helpful for us to, when we're sending out information, to have the most current treasurer. If you have a minister that you're making deductions for, or a payment for their group insurance and pension, their name, their member ID number, which is an alphanumeric number. I think sometimes we're getting full numbers, which I'm not sure where those numbers are coming from, but it's the first 3 letters of their last name and then 3 numbers, so an alphanumeric. If you're unsure, feel free to ask your minister or staff, or contact our office and we can give that to you, because it makes it easier when we're entering the information. Basically, the difference with this form and the form for other employers is the congregational assessment or the employer share. So if you have a staff member that's on the pension plan, then you're going to have a percentage of their qualifying income. Currently it's 12%, and it'll be going down to 11%. Or if you have somebody who's just remitting group life insurance, then you would use the other form, which is the former purple form. So those are the 2 forms that we ask. And if the amount that you're remitting is not on this form, then it goes on a separate check, because it's for something else. Next.
This slide here is an example of the notification that I get from the Scotiabank when we receive an electronic funds transfer. So you can see that I don't really get a whole lot of information, and then I have to try and find which St. Andrews it was that sent me this EFT. And I'm sure you understand there are a couple hundred St. Andrews churches across the country. So it's very difficult sometimes unless we get the proper remittance. Next slide. This is an example of what I receive if you make a bill payment through Scotia Bill. Again, it gives me no information whatsoever. So we are really dependent on you sending the EFT remittance form, which we can see on the next slide.
Rebecca, there's a question. Do they need an invoice or account number to set up the PCC as a payee through Scotiabank?
I think your account number would be your congregation code. And I don't think we don't have invoice numbers for Presbyterian Sharing or PWS&D. So I think you can just put in sharing on that.
And you can only do that through Scotiabank and RBC right now.
Correct.
Yeah, thanks.
So all of these remittance forms can be found on that link that I shared quite a bit earlier today in the chat function. So it'll be close to the top of the chat. It's presbyterian.ca/resources/finance. And all of these remittance forms can be found there. You can, if you're sending an EFT to us through your bank, we need you to fill in the remittance, the online remittance form, which is the online remittance form /online form. And you just click on that link there and fill in the form. If you want to, what's the next one? Yeah, so if you fill in that form, which we'll see in a minute, it will automatically send me that information to the ar@presbyterian.ca email account. If you have any questions on how to send an EFT or what the account number is or anything, you can call me at the office. I'm in the office twice a week usually now.
So Jim, if this is what the form, the online form actually looks at the top, it has the instructions for Rebecca. And then Jim, if you click to the next one.
So when you click, when you click into the form, all of the fields that have the red asterisk are mandatory. It won't let you advance unless you fill in these forms. So again, you need your alphanumeric congregation code, your congregation name and address. The contact name is the treasurer or whomever it is that is sending the EFT, that person's email address and telephone number. In the next slide. And here you will click on the tick box to tell us what it is that this EFT is for. Is it for to be sent to pension? Is it going for the health and benefits, health and dental, or is it coming to the mission and ministry, which is Presbyterian Sharing, PWS&D, and etc. And then you just click submit. If you tick the box for pension, then it will go to this form and you fill in all of the amounts for all of those things that Leanne went over just a couple of minutes ago. And here, if you have ticked the box for health and dental, then you put in how much you have sent, the invoice number, which is HDRC and a bunch of numbers. If you get an electronic fund reference number from your bank, or if you have any comments for me to clarify what you're paying, then you can enter that in there. And if you're paying Presbyterian Sharing, PWS&D, or other missions, you put those amounts in there. So if you are making a contribution to Canadian Ministries Honoring the Children Fund, then you would just write that in the comments below. Or if you're making a contribution to Canadian Food Grain Banks, then you would make that comment below. If you're making a payment to a lending fund loan, then you can write that information in there as well. Other remittance forms that are available on the resources webpage. You can sign up for automatic withdrawals every month on the 15th. We do automatic withdrawals from some congregation bank accounts. So this saves you, the treasurer, a lot of time and headache from having to write out a check every month or having to remember to send the EFT every month. We can, if you fill in this form and apply for the automatic withdrawals, we can set that up so that each month we can take that money automatically from your account. So then you would see, you can sign up for health and dental or pension or Presbyterian Sharing and PWS&D or all of the above. These amounts would be taken separately, however, because again, they are going to separate departments and separate bank accounts within the PCC National Office.
All right. So let's talk briefly about the Congregational Remittance Summary Report. And this is a report that we send to congregations every quarter, and it's addressed to the treasurer. It includes the funds that your congregation sent to the PCC for the Presbyterian Sharing, PWS&D, and other PCC mission funds, the loan repayments, and conference registrations, if there are any. And at the top of the report, you will see the period that it covers. So on the example here, it covers from January 1st to October 31st. And what this report doesn't cover is the pension, health, and dental payments and other invoice payments, as they are they are handled in separate accounts. And in the middle, you will see a table that lists all the payments, all the gifts that your congregation sent in to the PCC, and for the areas that we mentioned before, and with the dates, the amount, and if you send in a check, there is also a check number. So you can actually match this with your congregation's report on your book, so that we can reconcile if you find anything wrong and that doesn't match. And at the bottom, there is a little summary. So you will see on the left, there is a Presbyterian Sharing. Under that, there is your congregation's recommended allocation and the accepted allocation and the amount that you sent in as of the date that is dated on this report, and the balance that you still have to send to the PCC. So for this congregation, and it has the recommended allocation of 17,193 and the accepted allocation of 12,000. And as of today, they on October 31st is sending 7,393, and there is still a little bit of balance that is remaining for the rest of the year. And on the right, to the right of Presbyterian Sharing, you will find the amount that was sent to the PWS&D, and underneath is the other PCC mission. And so after that, you will see there are two lines at the bottom that is called year-to-date gifts from individuals for PWS&D and for other PCC mission. This is for your information that an individual made a gift to the PCC for PWS&D and other PCC mission and credited to your congregation. And the gift is counted towards your congregation's contribution for this year. So this is listed for your information. And this amount of $500 of PWS&D has been included in the summary above under the PWS&D YTD received, so as that for the other PCC mission. So when it comes to the year end, you will receive a full year report that is for the period of January 1st to December 31st of this year. And you can find the total amount that your congregation remitted to the Presbyterian Sharing, PWS&D, and other PCC mission. And you can use these figures to fill in the statistical report that we will cover in the next webinar. So on this example, you will see that there is another note at the end. So it said 4,475 Presbyterian Sharing intended for 2020 received in 2021. So sometimes, like because of postage delay or there are other reasons, your congregation sent in a check for 2020, but we didn't receive it at the end of the book close date, but we received it after. So that check has to go into the 2021 contribution, but we put that note in your remittance report to let you know that, okay, this amount, it was intended for 2020, but it was counted towards 2021 because they came in late.
Those remittance reports are sent to you periodically throughout the year. So if you can report, if you notice any errors or anything on your report that shouldn't be there, do let us know so that it can be fixed. And then there's one sent to you at the year end and in January. So if you look at those so that we can get anything fixed before the books close, that always helps keep all of our books nice and clean. Oliver, you were going to talk about building insurance.
You're muted,
You're
Oliver.
muted. You're muted.
I was in the middle of something. We have a special insurance program with Marsh for congregation that we negotiate every year. And currently there are about 400 congregations that are in the program. And recently, insurance rate has been increasing rapidly due to two reasons. First, there's only a very limited number of insurance companies who are willing to insure churches. And the second factor is natural disaster. Even though our loss ratio is only 31% over a 5-year period, our rates are impacted by natural disaster happening around the world. So as a result, premium has been increasing rapidly. And you are free to compare rates with your broker or insurer and decide whether you want to join the program. And if you want more details, the PCC website, you can search for Marsh, M-A-R-S-H, and it will give you all the details with contact information. So that's the information about insurance. Next. And there are financial resources available if your congregations have some cash flow issues. For example, Canadian Ministry, they have loans available for congregations. And if you have more requirements for funds, you can apply for the lending fund loans. And you can apply up to 100,000. And if you return the money within 12 years, it is interest-free. And the third available sources are PCBC loans. So if you have a major renovation, you can apply to PCBCs, and the loans are guaranteed by PCBCs. And the amounts are much higher than the lending fund loans. So for example, you can apply for about $500,000 if you are qualified. So just contact the various ministry or finance department or the PCBC office if you want more information. That's it. Morris?
Yep. Those with manses, how often do you inspect the manse? Maybe it's used by the minister, or maybe you have the minister has moved out and you're now using it as a rental property. How often do you go and inspect the manse? We as a congregation had a minister living in the manse for quite some time. It went vacant. He left the congregation, and we went in and inspected the manse. It cost us somewhere in excess of 25,000 to do repairs and fix it up, do renovations. So what I would suggest is that you do an annual inspection of your manse property, whether the minister is living in it or whether you're using it as a rental. Then also plan to maybe update or do renovations to maybe one room a year. Maybe it just needs a painting, coat of paint, and that will help to bring it up to date. Or whenever the person leaves, then you probably have to go in and do a complete renovation. You can do it either way, but I would recommend that you try and do 1 room or 2 rooms every year so that you don't get stuck with a big bill whenever the manse goes vacant. Again, maybe you can do it if you want to leave it until the manse goes vacant. It's going to be a costly expense for you, but you can do a bit of both if you also consider that. That's it.
Well, thank you, everyone. This has been the 3rd of 4 webinars on the Ministry of Managing Money. The next webinar will be held on Thursday, January the 13th, 2022 at 2 p.m. It's Telling the Story, Reporting and Communicating Finances. Karen, did you want to take over?
Yeah, I was going to say, as you can see, we've always been very ambitious and tried to cram in so much things into 1 hour and 15 minutes. And our last 2 have gone for pretty much 2 hours. So when we're looking at that one and as we're planning it out, we may send out a poll to find out if people would prefer it divided into 2, and we could do it over 2 days instead. But we'll find out. At least you can watch the recording if you found this too long. So we'll just go to the Q&A time, I think.
We have a couple questions that got missed in the chat, so let's start there.
Great.
Do both the clergy and treasurer submit a housing allowance form?
No, it's the minister. At least there's one form. Parts of it are filled in by the minister and parts are filled in by the treasurer.
Okay.
And then it's all sent in together.
Say that again, Karen, sorry.
And then it's all sent in together because it's just one form.
Okay. And once the minister receives the clergy reduction letter from CRA, how do you calculate their pay?
I think there are instructions on the form that you have to follow to calculate the pay. Generally, there's a formula in there.
If you go on to the online website, there's one of the questions that asks when you're claiming the deduction for the housing allowance, they will ask you, have you received a letter from your minister? So it's part of the online calculator, and it'll ask those questions so that you can do the right thing with the calculation.
Okay, thank you. That's all from chat. I know, Doris, you had a question in person, so I'm just gonna ask you to unmute. I think I can do that. Are you able to unmute?
Yeah.
Okay.
My question ties in with the clergy residence deduction and the, I have a new minister was only with us for 4 months so far in the year. And so a T1223 was never completed. So I don't have any approvals for reducing pay. So I've taken off our tax. So I've taken off the full amount of tax and CPP and EI, but I believe that housing allowance was considered, that is housing allowance separate from utilities, was considered non-pensionable. So then when it comes time to complete the T4, and you're supposed to put the amount or calculate the amount that's not pensionable versus pensionable, I guess I don't know, because I don't have approval on the 1223 to actually recognize a clergy residence deduction. Can I even recognize so far in this year that he's actually being paid what's considered a housing allowance? Or is it all just considered for this year fully, like fully pensionable?
I think for the clergy resident, the minister, they can still complete the form and file it to claim the tax back at the end of the year when he or she filed the tax form. As far as pension is concerned, I think you can just report it as you do on a regular basis, and the minister will have to calculate the refund by himself when he got the approval from Revenue Canada related to the deduction.
So I guess what I'm referring to with pensionable is referring to Canada pension, like CPP, the base that you use that for. Like, should I be, when I'm doing his monthly pay, consider the amount that he's getting for housing allowance and because if you try and use the online form without having approval from CRA, you can't reduce the amount that's, I suppose I could go in and say the amount's pensionable is less, but then they usually send up a question or give you a warning or something.
Well, you will not reduce the taxes because you haven't received the approval from.
No, but
CRA
Canada
yet.
pension amount. You see, if the stipend, you should be just paying Canada pension on the stipend,
Yeah.
not on the housing allowance. But Canada Revenue never designates that when they respond to the 1223. At least that's the way I understood that the housing allowance was not considered pensionable for Canada pension purposes. Does anybody have any experience with that?
Morris, do you have experience with housing allowance related to CPP?
Yeah, I think you just treat it as basic income and it's subject to the pension because you haven't got the letter from CRA. So you just treat it when you're doing the online calculator that, as I said before, you've got to check a box if you've got the letter. If you don't check the box, then it will assume that you haven't got the letter and it will go through and do the rest of the calculation on the higher amount.
Okay, so we have no, it was something that I saw years ago from the 4Cs saying that generally Canada Revenue did not recognize housing allowance as being a pensionable income. It is income for the purposes of EI, but not Canada pension. But I'm wondering if that's not really true, or because I'm getting Canada Revenue seems kind of quiet on that amount, on that subject.
I think there are differences between what is which items are subject to EI and CPP. They're not always the same.
No.
Mhm.
Okay, I'm
So,
still.
it's not a bad question, Doris, and maybe it's something that we can, if the 4Cs, we can research it more and ask them. We have membership there and we could consult with them.
I just am not sure because it's almost year end, and I don't know if I've calculated if I've taken off too much for Canada pension. In other words, because it's not just affecting the minister, he'll get it back if the government decides he's paid too much, but the church has matched it, of course. So we're paying out too much. And then when it comes to calculating, doing the T4, I always struggle. Well, am I supposed to consider this amount as part of the pensionable income, or am I not? Anyway.
If you've calculated the amount incorrectly, it's possible after you file your T4s and T4 summaries that they will do a peer review and they will go through, and if they've got questions, they will ask you for clarification. And in that case, you may end up with a credit that's going to come back into your account.
Well, I guess I could do it that way. And one other quick one then. Do most congregations pay utilities in a, like, just pay the minister's invoices as they come in? Or do, like what I was doing previously was I had a pretty good feel for what the minister paid. So I made an even amount every month so I didn't have to recalculate his pay every month. And then in December, I'd get the invoice, his bills, and I would just adjust for the last month. Do you know what most people are doing?
That's the best approach. Give them a flat amount and then adjust it in December.
Okay, good. Thank you very much for your help.
It seems you're going through and doing calculations on different amounts for every month on the payroll. So just give them a flat amount, maybe estimate it low, and then give them a flat amount. And then at the end of in December, you make up the adjustment.
Yep, great. Thank you so much.
Okay, we have one more question in the chat. Is housing allowance supposed to increase every year, or do you add COLA or allow for an increase in utilities?
I can speak from the Presbytery West Toronto side that each year we go through. In fact, next week when we have our Presbytery meeting, we're going to be approving the stipends and the housing allowance for the ministers for next year. We continue to have the increments. I think there are 8 increments over the base, and that's for the salaries. And we also then have a look at what the increase, the cost of living allowance increase is. And I go onto the Canada Statistics website, look and see what rates apply to rent and things like that, and then apply that portion against the housing allowance for the next year.
Lawrence has written, Larry from Westminster Presbytery, that the housing allowance is supposed to be, just a second, I just lost it. Housing allowance is to be reviewed on a regular basis, which some view as annually and other congregations as every 3 years. HA housing allowance is not based on inflation, but on real estate rental for your local area. If providing a fair market value housing allowance, have a professional provide this number. And I think that I'm going to get Larry on the team helping to devise these webinars in the future. You've got a lot of the answers. Okay, we are working on the Q&As from the previous webinars, and we'll include these ones. It's just because it takes us a little bit to clean them up, and we're doing some research to make sure that the answers are correct. So we will circulate those out to you. So if we find something that was incorrect answer today, we'll include that on the document of the Q&As. But thank you again. We will. We have been getting the recordings posted up on the leadership webinars, usually by Tuesday morning. So we'll continue to do that. And I will be emailing you out to remind you. It just sometimes takes a few days. Thank you for everyone for participating. Thank you for your patience. And a little shout out to the health and dental plan. I had some dental surgery yesterday, which wasn't planned. I got it squeezed in so that I could maximize my dental benefits. And that's why a few people have picked up for me in the presentation area, and I was very grateful for everybody's participation. So thanks.